Shares of FedEx are up sharply this morning, about 6.5% pre-market. Company posting better than expected quarterly results, both on the top and bottom lines. Also re-raised its guidance for the full fiscal year, authorized a new $5 billion share buyback program. And yesterday, on Closing Bell, I spoke with FedEx President and COO Raj Subramaniam, and here's what he said about the company's challenges and the road ahead.
We had roughly $470 million of headwind in this quarter. Roughly before that, that's what we expected. We don't expect that to continue in the second half, if that's what you're asking. And we also feel, because of the value proposition and the demand that we have in the marketplace, that we were able to improve our operating profit and operating margins in the second half.
So FedEx has had labor shortage issues. Its workforce is not as unionized as its chief rival, UPS, where they've seen a little more stability because of that unionized workforce. It has been looking to bring in 90,000 workers is what it was aiming for, just for the peak shipping season that we are currently in. Subramaniam saying that it recently fielded 111,000 applications in 1 week for hourly positions. That's higher than any week in its history. And to just put that in perspective, it had been more like 50,000 per week back in May. So they are seeing those workers come off the sidelines. I asked him what he attributed that to. He says higher pay, more flexible hours, more benefits, more incentives to basically bring those workers in and apply for these jobs. Because of that, they are well staffed for this key, crucial peak season that we're in the middle of. FedEx had earlier forecasted that they were going to see a 10% increase in peak season volumes between Thanksgiving and Christmas versus the pandemic 2020 peak season. I asked if he's on track for that. He said it's still a little too early to tell, but that the week of Cyber Week, they did see 100 million packages moving through the system. Carl, this is really one of those companies that, because they touch so many different types of goods across so many different markets throughout the world, they really have an economic lens on how things are moving, what's moving, why it's moving. In terms of the Omicron variant and the impact of coronavirus, it's one of these companies that, given the fact that it's been essential work, basically has that playbook in place. But we're going to have to see how that plays out. I don't think they expect full air capacity to return. It's going to be constrained through calendar year 2022. They don't expect a full recovery until at least 2024. And of course, a lot of this depends on what we see with Omicron and some of the lockdowns that are taking place in different parts of the world right now.
I thought it was fascinating. Operating margin above 7. We were looking for somewhere in the mid 6s. But I thought the most interesting part of your discussion last night was their strategy of doubling down on e-commerce, really going back several years, Morgan, and
yes,
the projections of the numbers of deliveries that they have going into 2026. It's going to be an amazing difference from the amazing numbers we have now.
Yeah, and of course, this is a key for investors, especially in that ground unit, which handles so much of that e-commerce volume. I mean, Subramaniam saying yesterday to me that in 2016, the industry had 50 million parcels per day. By 2026, to your point, expecting 130 million. So this has been a secular growth story. Some of that demand has been pulled forward by the pandemic. And I did ask what that means for an evolving competitive landscape, given the fact that FedEx did cut ties, at least on some contracts with Amazon. UPS has picked up some of that market share, but largely we've seen Amazon just plow billions and billions of dollars into building out its own transportation network so quickly, so aggressively, to become sort of one of those key delivery giants in its own right. And he basically said there's more demand than any one player can handle. And so I think the point being there that they'll be continuing to pick up some of that business from Amazon rivals, because e-commerce is just the way of the future for retail in general.
Shepard Smith here. Thanks for watching CNBC on YouTube.